Welcome to the last video about financial planning. This video will be a walkthrough of the weekly tasks of working with the financial planning block of ASMX. The work consists of several steps, and we will go through all of them. The list will also be available in the description of this video, as well as links to videos covering every step in more detail. We will not be talking about setting up financial planning, assuming that this has already been done and the structure of it has already been created. This means that there are already income types, expense categories, funds have been created, and percentages of income have been set up to be deposited into them. That being said, the initial structure of financial planning is not something that must only be created once and always be kept in its unchanged form. Things like income types and expense categories can easily be archived and replaced over time, as well as funds. However, for now, we are assuming that the setup has already been completed and we'll be looking at weekly tasks in financial planning. In step 0, 3 types of information have to be entered into the program: income transactions, bills, and CSWs, or completed staff work. Step 0 has to be done all throughout the week until the actual financial planning happens, and by the time FP begins, all of the data must have been entered. If your accounting has been integrated into ASMX, most, if not all of this data will already be entered automatically. Typing it all again by hand will not be necessary. But here, in this video, we'll be looking at manually entering the data. For questions about integration of accounting, please contact our tech support. Therefore, one of the first things to be entered into the program as part of step 0 are income transactions. There are 2 ways to do this. The first is as operations in the Income tab. Click on the Add Transaction button, fill in the amount, the description, and all the other information, then click on Save. The second way for income to be entered is as a paid invoice. Go to the Invoices tab, then click on the invoice that you're receiving money from. By default, the full payment for the goods will be displayed here, but if you have only received partial payment, change the number to the actual amount received, then click on Save. Either of these methods will result in a transaction appearing under Income Transactions. You have to keep adding these invoices into the program all week, as payment for an invoice is connected to every specific invoice. The second type of data in step 0 is bills. They also have to be habitually entered into the program and will be approved in later steps of working with FP. To add a new bill, simply head over to the Bills tab and click on Add Bill. Fill in the form and then click Save. The third type of data in step 0 is completed staff work. These are submitted by posts from the virtual office of every employee in the Expenses tab. So let's head over to My Office, then Expenses, and Add Purchase Order. Fill in the information and then click on Save. If you need to resubmit a previous purchase order, whether it be one concerning a regular expense or one that was denied during the previous financial planning period, click on the icon next to an already existing purchase order to copy it. If you have no previous purchase orders submitted, you will not see these icons. Submitting CSWs has been designed to be as convenient as possible. You can set up who can submit them and for what categories. There's no paperwork, and the employees don't even have to be located in the same building. The entire history of submitted CSWs is available. Who submitted it, when was it approved or denied, and when was it paid for. Since all CSWs are digital, every purchase order submitted for this week's financial planning will be visible in the directive, which is the tab with which we will be working in the next steps. To reiterate step 0 one last time, income transactions including invoices, bills, and CSWs from posts. Step 1. Matching amounts in assets. Step 1 is done in the Assets tab. Here we will need to match up the check amount calculated by the program from the data entered with the factual amount of money that is available in the bank accounts and cash register of our company. The check amount is calculated from 4 parameters. Firstly, it is the total amount of revenue that has been received this week. As we have previously mentioned, this money will not be spent until financial planning and instead will be just saved up. We have to have the entirety of revenue at our disposal. The second parameter is the available amount of money in funds. This money has been deposited into funds during previous financial planning periods and is not yet reserved for any approved purchase orders or bills. We must also have all of this money at our disposal. The third and fourth parameters are approved but not yet paid amounts of money for purchase orders and bills respectively, and since they have not been paid yet, we must also have this money. The program then calculates how much all of these 4 parameters are in total in order to give you the check amount. In the upper section of a page, the accountant has to enter the actual remaining amounts of money in the company bank accounts and cash registers. The amounts in the top and bottom of the screen must match exactly. In that case, the background color for the difference will be green, like it is now. During a deficit, it will turn red, and during an excess, it will turn blue. In both cases, you have to look for a mistake. Somewhere data must be either missing or have been entered incorrectly. Look at the situation and solve it until these amounts match. The first step is very important. It guarantees that we control all of our cash flow through financial planning, all income has been registered, and no expense has slipped by financial planning. Such a setup eliminates any possibility for abuse of finances. For step 2, we will need to head over to the directive and work with its upper section. As we have previously mentioned, funds and the revenue percentages going into them are something that we assume you have already set up, and after that is done, approving transfers to and between funds takes just a few mouse clicks. Mark everything and click Approve. And that's done. Marginal income funds, mark all, click Approve. Corrected income funds, mark all, click Approve. If you want to change the amount going into a fund, simply click on the calculator right here and change it. These amounts can be changed at any time of working with financial planning and can be increased or decreased. It should be increased if the purchase orders and bills require more money than there is in the fund, and decreased if another fund needs it more. Working with funds is extremely simple, easy to view, and convenient. The program keeps track of money remaining in funds so that it does not go negative anywhere, as well as making sure of the remaining amount of income so that it does not go negative either. If we try to approve a transfer bigger than the current income, the remaining revenue will go negative, and the program will not allow you to close such a period of financial planning. Having this amount be negative can be used as a short-term exception, such as if we increase the amount deposited into one fund and immediately decrease the amount for another. But again, the program will not allow you to close an FP period if it has a negative revenue. Let's move to the Bills tab. As the oldest unpaid and soonest to be overdue principle has to be followed when using financial planning, the first thing we have to do is sort the bills by due date. Click on this arrow right here, and now the oldest unpaid bills are at the top, making it more convenient to work with them. Keep in mind the sum that remains in your bill-paying fund. Start marking the bills which you can afford to pay this week, as long as the amount to be paid is smaller than what remains in your fund. If you exceed the fund's reserves, remove the last marked item. In the Actions menu, select Approve, and select a source from which you plan to take the money, which could be either a fund or revenue. For this demonstration, we have a dedicated bill-paying fund, and if it contains enough money, the number will be colored green. Technically, nothing is preventing us from approving a couple more of these bills from one fund and approving some more from another. In some situations and for some companies, there may be several funds created for paying for various types of goods and services. In an emergency case, we can approve a bill and source it from a fund which was not meant for it. It all depends on the situation. Choosing funds is something that will vary from organization to organization. In any case, our program will provide the tools to easily manage these payments. For step 4, let's return to the directive once again. For working with purchase orders, it is important that once we have started looking through them, no one else may submit any additional ones for this period. Click on Prevent Creating Purchase Orders to do that. Now, we will need to go through all the submitted purchase orders and make a decision about every single one, whether to approve or deny it, and how much money to approve for it if it is not denied. It is important to think about purchase orders not simply as another expense category, but rather investments into your own company, and to judge whether they will bring benefit. What will the company receive for the money spent? Will it increase revenue or cut down expenses? Are there any other advantages? You also need to look at the amount of data provided in the CSW. Can you fully understand the situation based on the data provided? Was the situation properly analyzed by the submitter? Is this really the smallest possible sum that this can be achieved with? If you can answer yes to all of these questions, you can approve that purchase order, but if not, it is probably best to deny it. Besides that, when approving or denying, we analyze available statistics and determine the state of our company. If conditions are not great, investment should go into production and advancing the company. If everything is looking good, there's some room for encouragement and bonuses to salaries. Look at specific actions and how they affected the company. This is the general mindset that you should have when making such decisions. Let's review an example purchase order: shipping costs. The money is needed to get supplies through customs. The employee writes that for most of these products, the warehouse stock is low and some have run out completely. Therefore, the approval of this purchase order directly affects income. If we do not approve, we will lose money. So let's approve. The background immediately changes to green, showing that we have successfully approved it. Let's open up another example: office supplies. First of all, these are definitely not office supplies. This is the purchase of a car, a massive investment, and the submitter writes that they need about €1,000 per month. This is leasing. If it is approved, every month for the next couple of years this purchase order will keep showing up. So what is the total cost of this investment? How exactly will this benefit us? Do we really need to invest in this right now? And what's wrong with the 7 available company cars that we already have? Perhaps we should just split the drivers into 2 shifts? It is possible that there is actually a necessity for an 8th car. Maybe our number of deliveries has recently grown, or there is data showing that it will soon. Perhaps this is a car for transporting some special cargo, and maybe it has some special equipment. In any case, nothing in the purchase order points to that. Let's comment that the CSW is incomplete and more details are needed, and then deny it. This is how you need to go through every single purchase order, thoroughly judging it and making a decision to approve or deny. However, as you saw, the actual process can be done very quickly. Step 5. After decisions concerning CSWs have been made, the Executive Committee closes the FP period. At this point, the program checks several parameters and does not miss any mistakes. These parameters are the following. Number 1. Every previous FP period has to be closed, and there must be no gaps in our history of approvals. Number 2. The revenue has been fully distributed. If there is any excess remaining, there will be a button right here allowing you to do just that. Number 3. All purchase orders have been reviewed and have been either approved or denied. Lastly, number 4. There are no funds with a negative balance. If everything is in order, the FP period can now be closed, and upon doing so, a text will appear, showing that this period has been approved by the Executive Committee. Finally, this period can be approved by the Financial Director. We are currently logged in with a Financial Director account, so the text already shows that this has been approved by the Chief Financial Officer. Again, due to everything being digital, the FD could be on another continent, and it doesn't make work any more difficult. At this point, the FD will check whether all finance-related organizational policies have been followed in this FP period, and if need be, will change approvals and denials of funds, bills, and purchase orders. For this demonstration, we'll assume that the FD has no objections and they approve of the FP period. After this, they can create a new period for next week. And that's it. In conclusion, once you have set everything up, day-to-day use of financial planning is very fast, simple, and convenient. This program allows you to keep company finances tidy and organized, and invest money exactly where it will bring the most benefit to the company. After you try using our program, there will be no reason to go back to financial planning using spreadsheets, or worse yet, paper. And as always, thank you for watching, and if you have any comments or questions, we'll be happy to answer them in the comments below.